right, all right, all right. Okay, I think we got everything going. Is it working? Perfect. All right. Hey, everybody. Thanks so much for tuning into Young Money Investments. My name is Cameron Bennion, and I am so glad that you are here to join me today. So today we are going to do a little bit different video. We're not going to do as much charting and that kind of stuff and kind of follow the patterns. You guys should by now kind of know that the markets have been down quite a bit today. But that doesn't mean there's not opportunity to buy on those dips and have little day trades and everything like that. So I ended up taking a position today, took a few more positions. With the market being down again, I just keep seeing great buying opportunities. So I ended up buying another 25 shares of Facebook today, bring my position to about 20,000 in Facebook. I ended up buying another 100 shares of OLED of Universal Display, ticker symbol OLED. I have 21,000. I ended up buying in them. Tesla, I ended up increasing my position quite a bit today as well. I ended up buying another 65 shares of Tesla. Getting close to that $50,000 position that I was kind of wanting to get in. Tesla's right at 301, and so it's right in that chart pattern, that area that I wanted to buy in. I'm average cost into Tesla right at about 309. So I'm a little bit higher on my buy side. I got a little buy happy when it was trading at around 315, 314, obviously. But makes me happy that I'm in Tesla right now. And then I did day trade JDST, ended up making a solid 204 bucks off of a single day trade on them with a $10,000 position. So 2% was all that I made on that position. Like I said, though, $200 here, $200 there. To me, profit is profit. And I will probably end up keeping them around for swing trades as well, though, because it's trading at about 50 bucks. I see resistance right around 60, but that's kind of all we're going to do as far as talking about that kind of stuff, kind of in the market and everything like that. What I wanted to go over today was going over mindset and that kind of thing when we're talking about trading when the economy and everything is like this. A lot of you new traders and everything like that, even including myself, who's been trading for almost a decade now. Like I started when I was 14, 15. So yeah, 10 years. I've been trading in and up in a bull market. I mean, we have not had a downturn. That was the whole reason I got invested, was because there was such a big downtrend. And I thought, you know what? I don't know a whole lot about the stock market, but what I do know about stocks is that the economy and the stock market has continually gone up for the past 90 some years. It's a very good high probability that these stocks will rebound and continue to go up after we come out of this. And so I bought in at the dip at the bottom and have ridden it up ever since and continued to buy, sell, and trade and all that stuff. So I wanted to do a quick history lesson because one thing I think a lot of people who don't have a lot of money, one thing they tend to do a lot is they tend to blame their problems on rich people. And I think it's completely absurd and completely ridiculous and unfair because we all have the same tools. Now, granted, there are some people that are born into it, but for the most part, a lot of these great, these young billionaires, Mark Zuckerberg, I know who's the owner of Snapchat? He's Evan Spiegel, I think is his last name. Billionaires in their 20s, it's amazing, it's incredible. They all did these things on their own, though. And so I wanted to talk a little bit about why pullbacks make rich people richer and how you can learn to do that too. That's what I wanted. That's what I wanted to do. I want to teach you guys how you guys can be adopting those same strategies. And so let's roll into this really quick here on the screen. And I'm going to pull up let's see, we'll move this over here. Yeah, put that right there. This will come over here. Oh, I forgot there's one other trade I wanted to show you guys really quick, which was Lockheed Martin. So if you look at Lockheed Martin, this was one that I've been kind of following the trend and everything like that. And this will go back to a lot of the patterns. I want to go over a quick pattern teaching moment for you guys really quick today. So Lockheed Martin, forget you can't see my finger on the screen, so I'll use the cursor. So if you watch Lockheed Martin and everything, you watch how it was trending below the EMA, could not break very much above the EMA right in this little area. It would break above, come back down. break above, come back down, break above, come back down, break above, come back down, back and forth, back and forth. That EMA was acting as a resistance for the stock and everything as it came through here. And it also ended up having the SMA acting as resistance as well and being able to break above that. So it had not only EMA but SMA resistance, and you notice that it has had that sharp downtrend. It's kind of consolidated through here. If you do look, you can see where it's had kind of some consolidation patterns as well, straight through this area, kind of even dating all the way back here. So if you notice, it's had some good consolidation. It's continued to trend right in here. It used that as support, and it's had a great day. I forget what I ended up making on LMT as well. Now, this is a swing trade, so I don't consider this making any money because I'm still in the position, just like I wouldn't consider losing money on Lockheed Martin a loss. So it was up 2.8% today. I mean, it was a gain of $9.16. I made $162, or would have made if I sold out $162 on them. Callaway is another one that this down economy has not even touched, which is Eli, and I actually called this company out as one of my long-term investments, as far as like I plan on buying and holding this company for the next couple years. But it has had a massive run. I mean, so I've held it, not a massive run, but I've held it. It's up to 12.62%. You would think that with the downturn in the economy, we would see a sell-off, right? We haven't seen any of that. No sell-off. Like, it literally, you would have no idea that we've had a downturn in our in the whole market lately based on this chart pattern. It is literally just holding on that EMA line. It is a beautiful, beautiful, beautiful chart pattern. And I've loved Callaway Golf. I'm really glad that this is one of my number one long-term holdings right now. So Eli Golf, I still see this being able to probably run up into the $20 price range by the end of this year. That might be a little bit bullish, but I really do see a lot of potential with Callaway Golf. So take it with a grain of salt. I'm averaged in, just in full disclosure, so that I don't get any crap about this. I'm averaged in at $14.55, so yes, I'm up a few dollars per share and everything like that. But let's roll into our history lesson and everything that I wanted to talk about today. So if we talk about history repeating itself, the stock market itself started out back in February 1915. As you can see, we've had ups and downs, especially in the early stages, everywhere from 1950 till the inception of the stock market. We had a lot of ups and downs in the economy, or as far as the stock market went. This right here, this massive slide, which sold off about 90% of the overall stock market, was the Great Depression. Now, I'm sure you guys have heard about the Great Depression. It was a really, really ugly time for everyone. It didn't matter whether you were in the stock market or not. I mean, many people lost their jobs and things like that. But if you do notice a pattern here, again, we have some consolidation, talking about chart patterns, consolidation, bull flag pattern, and it continues up. We see that back in 66, 67, or 65, pardon me, we had quite a pop, followed by some downturns. It definitely continued to drop, and it took several years. I mean, it rode it down. It definitely rode down quite a bit. And so we made it all the way down here in April 1982, and then we started seeing this climb. So April 82 was a downturn in the economy. In the booming 80s. 80s was a great time here in America. Just continually grew. 86, we did see this massive, and obviously it's a blimp, but this was like one day, I want to say. It literally slid like 1,800 points. It was like called Black Friday or something like that. I forget what the actual name was for this particular time period, but literally the market sold off like 1,800 points in one day. The point that I'm trying to make, though, is that if you were to have invested, I mean, let's say you invested up here. This is 2007, so a lot of you can relate to this a little bit better. Let's say you invested in the market back in October 2007, right before the crash, right? So you're in or March 2008, I guess. Let's call it right there. March 2008, you invest at 14,298 points, and you ride down and did not sell out all the way down to 8,284 points. You would have experienced a massive sell-off. You know how many people sold off their shares at that point? Tons of people were selling. Moms and pops, people that had retirement and everything like that, invested in the stock market. But what happened if you went from April or March of 2008 and you waited until 2015? You waited 7 years. You would have been up a total of over 5,000 points. I think my math is right. Let me do the math again. So we're talking about, let's just call it 15,000. So you're at 15,000 points. You would have been up to 19,000. So you would have had a 4,000 point increase over the course of 7 years. Most people don't understand this, and this is a really important pattern to understand, is that time is on your side as an investor. Time is on your side. I don't want, I love my long-term investments, and I think those are very important because I'm in my 20s. Like, that's the big thing, is that you want to, I have time to ride out my investments. I plan on investing for at least another 40, 50 years or more. So I can ride out these downturns, these changes in the economy. And that's the cool thing, is even if you waited longer, so you wait until 2015, or then you wait till Donald Trump was elected and you just rode that up. So Donald Trump, you take the election right here at about 19,000 and you ride it up to like 24, 25,000. I mean, gosh, dang, it has been good. And so I just wanted to do a quick, brief history lesson and everything for a lot of you guys that have been worried and concerned about the stock market, because this is a long-term game. Granted, the swing trades are shorter, but I'm kind of taking this macro approach that we just saw here on the screen and kind of translating that into our micro approach on swing trading. I don't see any big major reasons that you need to sell your portfolio off and kind of hold in all cash right now. In fact, I've probably put in another 70 grand within the past few days because I see a good buying opportunity, and maybe I'm shooting myself in the foot. I personally believe, again, don't base your investments on my opinions and things like that, but I personally believe that in a few weeks we're going to be up, we're going to be out of this again. It's going to be white noise that we were worried about because the news media had got us all worried about it, and I'm going to be probably $10,000 richer. So that is going to be the goal. That's the goal with trading and everything like that. We will see what happens, but these are my strategies. This is what I'm kind of seeing in the market. If you have any questions, comments, concerns, please leave them down in the comment section and everything like that. And I'm more than happy to help you guys out any way that I possibly can. So thanks for watching Young Money Investments, you guys. And one more thing, please don't forget to like and subscribe. Yeah, if you like, subscribe, click the button, I'd love it. Thanks so much. Bye.